Quant large cap fund NFO. Will this NFO add risk to your portfolio or return to your portfolio or both? Let us evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take a right financial and investment decision so that you can reach your financial goals faster and smarter. First, let us understand this large cap category in detail so that it will be easier for us to evaluate this particular fund. Large cap funds, predominantly, they have to invest in top 100 companies by market capitalization. So, largest 100 market capitalization companies, large cap funds have to invest 80% of the stocks in this top 100 companies. Balance 20% based on the fund manager's outlook, he can decide to invest in rest of the caps also. This fund is suitable for high risk appetite investors because money is invested in equity. Equity is known for volatility, so high risk appetite is needed. Also, you should have long-term time horizon, 5 to 7 years time frame, because market will go through ups and downs. There is volatility. So only if you have your long-term money, please invest. If you have short-term money or you've got short-term goals, don't select this particular category. This particular category aims to generate wealth in the long run. Long-term capital appreciation is the goal. Short-term, they can deliver negative return also. Okay, by and large, we have understood this particular category. Now is the time to look at the NFO details. This NFO is open till 3rd August 2022. And the fund manager is Sandeep Tanton. Benchmark index is Nifty 100. Though the benchmark index is Nifty 100, this fund can invest 20% outside this index also. Minimum investment is just 5,000 rupees. The investment objective is to generate long-term capital appreciation by predominantly investing in equities and equity-related instruments of large cap segment. Quant, as a mutual fund company, they follow unique investment strategy, right? They predominantly give weightage to macroeconomic indicators, and based on the signals from the macroeconomic indicators, they time the market. They time to do the sectoral rebalancing, sectoral rotation. They time to move between large to mid to small, cash to stocks, stocks to cash. All these activities, they will be doing it based on macroeconomic signals, indicators they decide. Now let us dive into the investment strategy. 80% of the portfolio is invested in large cap stocks. Balance 20% will be dynamically invested in Nifty 500 universe to generate alpha. Based on the macroeconomic indicators, they identify sectors which will be in the limelight, and also they select securities to invest at their inflection point. Inflection point is the point at which the stock or the sector will be identified by the mass. So just before the mass, the market identifies the particular stock or security or the sector. Just before the recovery starts, they will invest. They will execute sector rotation based on the macroeconomic outlook. Also, they claim that early identification of potential outperformance is possible with their macroeconomic indicator watching. Now, all these things looks good, no? Like investing before the inflection points and like capturing the sectors early and early identification of potential outperformers. All these things are good in theory. Are they really capable of doing something has to be tested, right? This is the strategy, but they are going to follow. They'll construct a dynamic portfolio, means like they can rotate between the sectors. They will also dynamically change the portfolio, means their portfolio turnover ratio will be much higher compared to other funds in the category. In one word, if you want to summarize their investment strategy, they are going to give over weightage to macro-centric approach. They'll also give weightage to other aspects like research, valuation, liquidity. They all check all those things. In addition to that, they give more weightage to macroeconomic approach. Based on macroeconomic signals, they will decide the location. Okay, we have in detail analyzed what is a large cap fund and what are the key features of Quant large cap, and also what is their unique investment strategy we have analyzed. Now is the time to analyze this particular NFO, right? When we did our analysis, there were few positive observations and there were few negative observations. First, I am going to list down the positive observations. Being a large cap fund, this will have lower volatility and higher downside protection compared to mid cap and small cap. Because large cap funds are known for its stability. During the bear market and during the crisis, large caps tend to be more stable compared to mid caps and small caps. Large cap businesses have superior core competencies and distinctive advantages that keeps them ahead of the curve compared to mid caps and large cap. So this is an important advantage large cap funds will have. Large cap stocks will have rapidly scalable business models so that they'll be able to generate constant growth. Large cap stocks are highly liquid securities that enables investments have low impact cost. The stocks are highly liquid. Only in small cap or micro cap, you will have illiquid stocks which will have impact cost. So here the impact cost will be much lower. High capital efficiency and economies of scale is another distinct advantage of large cap funds, right? Being large capitalization, large market operators, they will have a lot of operations which will use economies of scale and bring unique advantage to its investors. Whereas mid cap and small cap companies may not have enough economies of scale. Large cap stocks, this top 100 universe, right, has got completely proven track record. They have already contributed enough to the Indian economy's growth. That way, these top 100 companies are proven companies, tested companies. There will not be any unexpected surprises from this particular basket. These are all the positive observations when we analyzed this Quant large cap fund NFO. And there are also a few negative observations that we are going to see now. Being a large cap fund, this fund is not suitable for aggressive investors because aggressive investors want to have exposure in mid cap and small cap. This fund will have only 20% exposure outside large cap. Being an equity fund, this fund is not suitable for short-term investors because this fund predominantly invests in equity. Ups and downs, volatility will be there. You will not be able to generate short returns in the short term. So if you have only short-term money or short-term goals, then please avoid this NFO. Being an NFO, this fund is not having a portfolio. Only after the NFO closes, the collected money, they will construct the portfolio. If there is a portfolio, we'll be able to find out what kind of sectoral allocation they have got, what kind of sectoral concentration they have got, we'll be able to analyze. What are all the top 10 holdings? How strong are they? What kind of concentration they have on the top 10 holdings? These analyses we are not able to do. So without testing the waters, we are getting into it. Being an NFO, again, this fund is not having a track record. Analyzing the past track record to judge the performance is an important aspect in mutual fund scheme selection. However, it is being an NFO, there is no track record. How this fund will manage during war-like situation, during pandemic, how they will manage. They are claiming that they have got unique BLRT on predictive analytics. Whether these things are going to work out in our favor in the large cap universe or not, that we have to check up. It looks like we are not able to do any analysis, any research, and we have to blindly invest. Simply say, like listening to like Quant's success stories in the other funds, we have to invest in this Quant large cap fund as well. That is something I'm not convinced. When we are investing in this fund without doing any research, any analysis, when we are investing, we are simply taking blind risk, and we are not able to take any calculated risk. What I would always suggest to investors is to take only calculated risk. Don't take any blind risk. Taking calculated risk will reduce your downside and also increase your margin of safety. So always say yes to calculated risk and say a strong no to blind risk. Remember, risk management is under your control. Return management is not under your control. Only by managing risk, you will be able to manage return. So be prudent. Take only calculated risk. Being a large cap fund during bull markets will not be able to outperform mid cap and small cap funds. This is something obvious demerit of this particular fund. Okay, we have analyzed in detail, in depth about this particular Quant large cap fund NFO. Now is the time to decide whether to invest in this fund or not. If you are a conservative beginner investor, large cap funds are suitable, provided if you have 5 to 7 years time frame. But what stops us investing in Quant large cap fund NFO is not having a portfolio, not having a track record. So we are not able to do any research. We have to take blind risk. And as an investor, you have to say no to blind risk always. And if you want to invest in large cap fund, there are existing large cap funds with a good amount of track record. So please go ahead and select good large cap fund with the help of your financial advisor and invest. In case if you like a Quant mutual fund as a company very much and you want to experiment Quant large cap fund, then invest a minimum amount in Quant large cap fund and invest, or wait till they construct a portfolio after the NFO period is over, let them come out with a minimum track record. Then we can analyze, observe, and really check how their predictive analytics is going to work out, and then we can take a call. Fine. Okay. Before you decide to invest in Quant large cap fund NFO or any other large cap fund, please have a sitting with your financial planner. Financial planner will be able to tell you in your overall financial plan for your financial goals and investment objectives, this particular fund is suitable or not. Based on your risk appetite and risk tolerance level, this fund will fit in or not. He'll be able to tell you. Also, when you are sitting with your financial planner, please ask him, when you are adding a new fund to your existing mutual fund and direct equity portfolio, what kind of overlap this is going to have in your existing portfolio, or is this going to bring any additional unique diversification? That you have to check out. After understanding this, you can decide to invest in this fund or any other investment in mutual funds. Hope this particular analysis has given you some 360-degree perspective. If you like this video, please share it with your friends. If you have any follow-up questions to this particular quant large cap NFO, or if you have questions on any other investment options or achieving your financial goals, feel free to book a free appointment with our certified financial planner. To book a free appointment with our certified financial planner, I have given you a link below this video in the description. Please click that link and book your slot now. Would you like to participate in insightful investment webinars? We regularly organize enlightening investment webinars for our YouTube watchers. We invite investment experts and ask them to share investment techniques and long-term wealth creation strategies. So if you want to participate in those webinars for free, please click the link I have given in the description of this video. There is a different link to register for the webinar in the description. Please click that link and leave your name and email ID. I will send you the invite for the next webinar. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.